Hey guys, Mike here. So definitely an interesting day in the market. Very volatile. I think the VIX at one point in time was down by 11%, if I'm not mistaken. The NASDAQ almost up 1%, gave it all back, gained it back, gave most of it back, then gained it back again. So it was all over the place today. So it was fun watching the charts and stuff. But we did have, big news out of China. They just unloaded a bunch of stuff this morning trying to save, not even really their economy. It was really more the stock market. And then, of course, we have some other news coming out for certain stocks. But I want to show you something to make sure you understand. Like somebody said in the comments, like, "Oh, you're trying to, whatever, put fear out there in people when it comes to the Chinese market." I'm like, I'm not putting fear in anybody. I'm literally just presenting to you what it is. Right? Their economy is a hot mess. It just is. Now, does that mean the stocks haven't bottomed? No, because the economy is not the market. And you're going to see with what they're doing, this is not going to help their economy at all. It was aimed at the stock market. And so, we'll start off with that. And I'm going to show this to you, as I told the members here this morning in their news brief. First, they sit here and literally come up with 37 retail funds to try to start bringing in liquidity into the market, start buying stocks, right? That's first and foremost. So, yeah, it definitely helps to go ahead and launch 37 retail funds. That'll definitely do it for you. But, of course, what else do they do? They cut the stamp duty, which we already talked about, in half. That's a tax when you buy stocks and stuff. Then they're going to slow the pace of IPOs and lower margin financing requirements, okay? What else is happening over there? You're seeing liquidity injections start to increase. This is August 2023. So again, what's the number one driver of markets? Liquidity, actions to somehow, drive capital into the markets, which they're doing. And it's been a while, but last time they decreased their stamp duty, it actually, put a nice little pop of about 9 to 10% into the market. Now, the funny part was, when you look at the market this morning for them, their index opened up 5.5%. So that's a huge jump. And then look what it did for the rest of the day. Just bled off, ended up closing up about 1.5%. And so obviously, I don't know if people just didn't believe this stuff or, obviously a lot of profit taken, but that was a huge drop off from the open. But you can see over here, it definitely helped the Chinese stocks. I mean, you got all these up at least 2 to 3%, most of them. I think XPeng, they actually went up because they made the purchase of Didi, I believe it is, which is the ride sharing company over there in China. So they were up about 7%, sold off some. But again, all of them are green. They should be because of all these different things you're trying to do to help their stocks. That's basically what the aim was. Now, as far as the economy, look, I don't hold back anything. I'm not trying to put fear in anybody. You take it for what you want to take it for. And yes, I told you before, the economy can suck and the stock market can roar. Okay, they're two different things, especially when it comes to trying to put liquidity in the market, which tends to be like the one thing that people who buy stocks want to hear. Okay, but this right here shows you over there how much local revenue was coming from the real estate market or is coming from the real estate market. And look at this right here. In 2019 and 2021, look at the percentage of revenue attributed to real estate sales. 81%, 86%, 81%. And look at the drop off in 2022. And how bad do you think that's going to be when 2023 numbers come out? So I'm just saying, the local governments, man, they're in a hurt lot. Because I told you, 70% of the wealth of that country is tied up into the real estate market. And so how do you fix that? And you saw what happened to Evergrande this morning, right? And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. It opens up for trading again and it drops 93%. So a lot of faith in that company, let me tell you. And so, yes, when you have a huge debt problem, when your country didn't get rich before it comes into these problems of slowing down like Japan did, that is a problem, okay? When your GDP per capita is as low as it is over there, it is a problem. When you're run by a government who wants control more than anything else, that is a problem. And you can almost predict what our government's going to do because of, they're basically, most of their wealth is tied up in the stock market here in the bond market, right? So you know what they're going to do. But over there, couldn't tell you. What I think they would do, maybe, but again, it's a communist government. Like I'm never lived under one, so I can't predict that for you. And again, the economy can suck. The stock don't mean the stocks can't move up. That's just the way it is. Okay. I mean, you've seen that in this country. That's just the way it is. But it's something you need to be aware of because obviously when things go bad, things can go really bad, especially when it comes to the real estate market. I went back and actually watched The Big Short the other night because I really love that movie. And I always pick up on something new every time I watch and everything, or get reminded of something because it has been quite a while since that's happened and stuff. And so, if you've never seen it, definitely watch The Big Short. Now, speaking of our stock market, you can see once again what's happening. Still got the big seven leading the way, and this is updated through August 21st now. So they're up 58%, S&P's up 15%, and all the other 493 companies are up 4%. So the breath still sucks in this drive up here. So make no mistake about that. Now when it comes to IWM, obviously still holding that 100 and 200 we talked about right there, kind of getting a bounce off of it. See resistance right there around 186 just right in there. But again, it held it, didn't break through there because it would have. Obviously, it definitely been going down to around 182. Needs to break above this, come back, retest, and then move higher, be nice. RSI is trying to move up. Nowhere even close to the 50 on the daily right now, but it's trying to move up as this was moving sideways and just basically coiling up for a move. And you can see positive bullish MACD cross is attempting to happen. It's trying to curl up. Doesn't mean it hadn't happened yet, okay, but it is curling up. For a positive move here, we'll see. And what will be perfect, is to really just have this break above around 186, move up, then retest right down here, come up. Probably going to bounce off the 50, reject, and then break through. That would be perfect, right? And so we'll see if that happens or not. Again, what was weird today, and maybe you can answer this, is what was going on with banks. This is one reason the IWM was higher than the rest of the indexes. For some reason, regional banks were green, and then the other banks, all the big banks were green too. But I couldn't find any news on this, and so, let me know if you can find anything, because as the regional banks go, IWM goes. That's what's been holding it down this whole time. And when it comes to seasonality, it's kind of, if you look at this, it's supposed to sell off in July, and then it's supposed to get a pop. It's supposed to be in the middle of August, but this obviously might be more towards the end because we're obviously in the last week of August right here. And then it's supposed to move up through the middle of September and then sell off. And then in October sometime, start its final leg up for the year-end rally. And so we'll see if that holds out or not. Again, I think a lot of this will depend on regional banks. Now, as one of you guys said in the comments, so this is the most anticipated head and shoulders on the S&P, the NASDAQ, multiple sector charts as well. And obviously, I agree, and they usually don't play out when people think that. And plus, on this one, you do have a daily bullish MACD cross right there that is formed. So, is this going to play out? Maybe not. If it does, obviously, we get a nice move down. But usually, seasonality-wise, there is a move up in the first of September and then a rollover at the end of September before we go into this year-end rally. So keep that in mind. Let me know what you think in the comments about that. Now, what else is happening? Again, we talked about the 10-year yield. What's it been doing? Basically moving down. Okay, and you can see on the RSI down there was basically just flat across, while the 10-year has been moving higher and higher. And maybe X marks a spot, maybe it comes down, we bounce off this trend line, and if it starts to go back up, obviously that is a headwind for stocks. If it continues to go down, that is a tailwind for stocks, which means they can continue to move up. Then you got the dollar, which continues its breakout. Again, I can see it come back down, testing that trend line again. It is overbought on the RSI. Usually you get some kind of rollover. It was slightly red today. But again, if both these are coming down, it's a tailwind for stocks. If both of them are moving up, it is a headwind. So keep that in mind. Now you have BABA, obviously we talked about one of the Chinese stocks moving up. And you can see right here, right around the 9250 area, which is, resistance for it at this point in time. We'll have to see if it can break above that. It's trying to get a bullish MACD cross down there at the bottom, trying to get that RSI above 50. And if it gets above 96, it'll get in that volume gap. And this is one of those ones that shoots up in these volume gaps, right? Gaps up, gaps up, gaps up. And so with this one, I don't even worry about it filling like gaps or anything. It doesn't act like a regular stock because it's ADR. But, if it does get in that gap, yeah, it can shoot right up to around 96.50. That will be resistance. If it gets above that, it can shoot to 100 very quickly. Again, though, it will go as the Chinese stock news goes. So just keep that in mind. If they keep pumping liquidity in, then absolutely it can continue to go up. Now, Tesla, we thought was going to have a super green days. It was up nicely in pre-market. Totally fell off a cliff as soon as the opening bell came up. Gave all the gains back and everything. You got this 8 and 21 crossing right here right now. The 8 daily moving average is basically holding it up. It keeps bouncing off of it. If it does get that cross, and of course that trend line right there, I think would actually kind of coincide with each other if it gets the cross and that breaks above it. It's going to be super bullish. I have no doubt it'll go to 260 very fast, which I'll show you in just a second. Again, it's got a bullish MACD cross on the daily down there. It's trying to play out. When we bring in the volume profile on the side, you'll see what I'm talking about. Well, I say if it can get above that trend line, gets at 8 and 21 cross, momentum behind it, calls will start coming in for sure. Boom, 260. We'll see if we can reject off that. Now, when you look at this, to me, you're still in no man's land, right? So don't be surprised. If you get a sell down because it's sitting in that volume gap, don't be surprised. Again, there's a lot of support right below that. A lot of confluence right below that in a certain area between like 208 and 214-ish, somewhere in that area. That's a little ways down. But again, it looks like the market wants to continue moving this one up. But, you know, this morning's got a nice little rug pull on it. Now, Palantir, this one's done its job. It has held that 1450, 1475 area. Again, 1550 will be resistance. We'll see if it can get above that. It's trying to get that MACD to curl up on the daily. The RSI is trying to move back up as well. But again, this one is still in that area that if it breaks that 1450, that means it will drop through the 100 as well. Probably head down to around 1350, which is where the 200 would actually meet it. So, you know, and again, can it break higher? Sure. But it will absolutely depend on the 10-year yield and the dollar, in my opinion, when it comes to the high beta stuff, because we see how it moves. When those things sell off, high beta runs like crazy. When those are moving up, a lot of times these are moving down. And of course, you know, we're sitting there with this, I mean, just a boatload of economic data, which I showed you yesterday. If you didn't watch that video, I'll link it at the end of stuff. But we do have, you know, a lot of earnings coming out this week, and then we'll get into a boatload of economic data coming out tomorrow. As you can see, you're going to have a lot of retailers. Don't forget about that. But you're going to have NEO coming up, then you'll have Best Buy, Big Lots, some others down there. And when you come over to the economic news, you're sitting there starting out, you're going to have a lot of stuff about housing. You're going to have the Case-Shiller Home Price Index. People love to look at that. The JOLTS job openings, the JOLTS job quits, Dallas Fed Services, Dallas Fed Services revenues. And keep in mind, guys, that jobs data comes out after the bell. So it come out around 10 o'clock. So how many times have you seen the market open up one way, JOLTS job reports hit, and then boom, takes us the opposite way, whether it be up or down. You know, we'll have to see. But we'll be getting a lot of job data and stuff, and just loads of economic news. Remember what I told you, watch out for. If bad news actually becomes bad news, and that's how it takes it, you know, we've kind of done a paradigm shift, right? You know, how many times has the market ignored bad news so far? So keep that in mind and stuff. So give me your prediction on NEO's earnings tomorrow, as well as how do you think the retailers are going to perform? Because you've had a couple of them report good, and the rest of them will drop 20-30%. You know, it's kind of interesting to see, to say the least. And the ones that are reporting, I don't see a whole lot of e-commerce going on there, so I could be wrong. But anyway, hope you guys got something out of it, man. Hit the like and subscribe button if you did. We appreciate all you guys that are watching the videos and sharing them and stuff. And I will see you Tuesday.